Good morning, Paul Georgie from Allendale. It's August 15th, Thursday morning, and grain market's given us a little more follow through to the upside from yesterday's gains. You can attribute that to short covering. The market is still oversold in corn, wheat markets, especially. Weather is providing some of the catalyst for the rally, especially in the soybeans. The cooler temperatures that are in the forecast, the dry conditions that we've got through much of the Midwest right now, and the low humidity is causing some stress on the soybean crop. As we drive around the area here in northern Illinois, we notice the soybean crop showing some stress yesterday afternoon. However, corn crop still looks very good, and with some high expectations for yields there. Other news, we've got export sales out here in about 15 minutes. We've got the news out of Argentina that their corn crop is expected to be 3% less than last year. However, don't get too excited about that. That still is higher than the average size corn crop that they've had over the last 5 years. We've got the NOPA crush numbers coming out at 11 o'clock today. Those numbers expected to be about 119 million bushel crushed. Rich Nelson did some studies here. Even with the adjustments the USDA made on this last report of increasing crush, that would suggest crush should not exceed about 116 million bushels. So we'll see where that comes out. That could have an impact on markets here around that 11 o'clock time frame. Cash markets can still continue to be very strong in the corn market from lack of farmers selling. The ethanol plants are looking for corn. We've got an ethanol plant in Indiana that is reporting paying $2 over the September contract. So the profitability at ethanol plants still are driving corn basis at this time. Other news is more technical related. You've got the corn market in a trading range now. This 440 on the downside and 470 on the resistance side of things. We're in the middle of that range. If we can break out either way, likely will cause a quick move in the direction of the breakout. Soybeans, however, continue to grind higher. They're about 50 cents higher so far this week in just 3 trading days. But the next resistance level is this 1250 area in the November contract. If we can close above that, the next upside target would be 1275. The rumors here this morning is that China had bought some soybeans out of Brazil. We're waiting for some confirmation on that news. In the livestock trade, the cutout for box beef improved. Choice up 203. Select up $1.40. So that's given us some signs that we've got some improving demand. A lot of that could be coming from retailers as they make their final purchases ahead of the Labor Day holiday here in just a week and a half. Pork cutout values, on the other hand, was down 117 yesterday. Futures continue to be strong in the October contract, the hogs, and mainly because of its discount to the cash. August contract went off the board yesterday, and the discount that October is carrying is giving some buyers an incentive, thinking that we've got to narrow that gap. However, history tells us that hog supply should increase, and seasonally we should see some weakness in cash hog prices after this Labor Day demand is complete. Chick placements and egg sets yesterday. Egg sets were up 5% from a year ago. Chick placements were up 2%, showing that the poultry industry is preparing for cheaper feed prices, and we expect to see some gains there, which could actually help grain and soybean demand down the road. Cash cattle, we are at a standstill there yet. There was some bids developing in the south at 119 yesterday. No sales at that price. Last week we traded at 119 in the south, 123 in the north, expecting to be steady higher this week as the product has certainly improved. Packer margins have improved as well. So a lot of things going on, reminding everybody that we've got the Allendale annual yield survey starting on Sunday night or Monday. It'll be available on our website to sign in on Sunday evening. You can fill out the survey online or just call us. We'll be happy to take the information down, and we appreciate your help ahead of time here, because you know your fields better than we do, and we like your input to give us an accurate number this year. If you got any questions, give us a call at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.